All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open for a few hours here. This morning we talked about the 2,900 level on futures coming into play, and we're not quite there yet, but ultimately I'd be very surprised if we don't get there. That said, it's probably going to act as a little bit of resistance, here for equities. So we'll be interested to kind of see how that plays on out here. But let's go out and continue our 30 indicators in May series, and thinking about what indicator to look at here today, or indicators to look at here today. I always kind of want to match it to kind of what's going on in the market. So decided I'm going to go out and take a look at a little bit of a different indicator with you. This is an indicator you hear me talk about quite often, the bullish percent index, in terms of its interpretation. But let's go in. Let's kind of talk about how it's derived, its interpretation, and then how it can kind of be used in terms of the broader market sense and in terms of individual sectors, right? Because there's a lot more of a usage to the bullish percent index than what you see me use it for on a day-to-day basis here. So if we're going to talk about the bullish percent index, there's only one place to start, right? There is only one place to start when it comes down to it, and that is with what is called a point and figure chart. Now, point and figure charts are really interesting. They're one of the oldest chart styles, in terms of day traders in the market. They kind of emerged in terms of popularity in the 50s and 60s. And you used to have traders, they would go to the broker house, right? And because you didn't have, the internet and online, all that kind of stuff at those times. So they go to the broker house and they sit there, and, they could see the feeds come through showing, the latest trade prices. And, they didn't have a fancy computer to chart it all for them. So they would sit there with this kind of graph paper here, it looks kind of like this. They'd sit here with this graph paper, and they would not track time. This wasn't a price versus time scenario. This was something where the bottom line here, there was no time, and they just would take each box, and it would be a different price interval, right? And so what they would do is, as the stock would go up, they would put an X. They put another X. It goes up again. And another X. It goes up again. And, the interval could be whatever they wanted, right? And then, all right, you know what? The stock starts to pull on back. Oh, okay, here we are, down here. Then it pulls back to down here. Then it does a third day. Okay, now they fill it in with zeros. Now that's more of a bearish type of pattern. Then, follows through with zeros, right? They keep stacking it on. And this could be over the course of 2, 3, 4, 5 days, even longer, right? Where if the stock goes up in the interval, in one interval, they'll put an X. If it goes down, they put a O. And they start to determine directionality, breakouts, different pricing patterns with this style of charting. It's a really cool style of charting, and it's something I've played around with a lot over the course of my years in the market. It's not something that I recommend for, a lot of traders and whatnot. It's a very unique style. I don't think it gives an advantage over a candlestick chart. I don't think it gives an advantage over even a line chart. They just have kind of different functionalities associated here with them. But what happens is this style of charting, a chart is either bullish or bearish, right? Here we have Procter & Gamble. It's a double top breakout pattern on the 31st of January, and it's been bullish since. We're now in the 16th of May, right? Well, it had the breakout, still going up. It hasn't had a 3-box reversal yet to kind of reverse the bullish pattern. This is significant that stocks either have a bullish or a bearish pattern to them. We're in a bullish or bearish mode. It's significant when it comes to the point and figure charts, or excuse me, the bullish percent index, because the bullish percent index is looking at all the point and figure charts for that index or for the S&P 500, and it's saying how many are bullish versus how many are bearish. So if we come up here and we now go into what is called the bullish percent index, and I'm going to get rid of any indicator here, and I'm going to come down and I'm going to take off the log scale because this scales from 0 to 100. You either have 100% of the stocks that are bullish or 0% that are bullish, right? You can't get more or less than that. So where it sits right now is it's at 59.8. So what's it tell us? It tells us that 59.8% of the stocks in the S&P 500 have bullish point and figure charts. They're in a bullish mode. What can we derive from that? Well, we could say, hey, the other 40%, they have bearish patterns. And you can see that over time, the number of stocks that have bullish versus bearish patterns changes. Here, back in January, we saw, 10% of the stocks in the market had bullish patterns. Well, that started to really rise as, stocks made a climb and a rebound. Here over the last month and a half, we have seen a lot more stocks go from bullish patterns to bearish patterns. That's all this indicator is looking at. It's taking those point and figure charts and it's saying, okay, bullish, bearish pattern, and how are those patterns changing over time? Now, the basic read here, the basic interpretation here is that a 6% rally in the bullish percent index triggers a bull signal for the market. So if you have 6% of the S&P 500 that goes from bearish to bullish, generally that's a bullish sign for the overall market. And then vice versa. If there's a 6% pullback, that's generally a bearish sign for the overall market. That's the basic interpretation. It holds up pretty well. Are there whipsaws? Yeah, there are whipsaws all over the place, right? This is definitely something that has whipsaws associated with it. And we're not talking about a 6% move in the bullish percent index. We're talking about it moving 6 points, right? So depending on how you're charting, that could vary a little bit. But you can start to see, okay, you know what? We have a lot of stocks starting to go from bearish to bullish or from bullish to bearish. And so you can take a look. And what have we seen in the market the last couple of days? We've seen a big rally in the market the last couple of days, right? Is the bullish percent index going up? No, it's not, right? We don't have, yes, we have a rally, but we don't have more stocks going from, bearish to bullish in the way that this rally in January and February was. What does that mean? Well, generally that means the strength of the rally isn't as good. That the overall rally strength is lacking. It's more of an oversold bounce than a real bullish rally. That's the typical significance. However you want to use this, in terms of understanding the market dynamics, is up to you. But there's a few things that you can add in here, right? And this is something where over the years I've played around with a lot of indicators on this, but the reality is most indicators, it doesn't make a whole lot of sense to apply them to the bullish percent index. One where it does make a little bit of sense is the RSI 28. Not 14 days, we're going to go 28 days. We're going to give a little bit longer time period here. We're going to use the RSI in a very basic format. And that is when the RSI is above 50, probably want to look at stocks in a little more positive light. When the RSI is below 50, probably want to look at stocks in a little more of a negative light. Yes, there are going to be whipsaws. There always are, right? Any indicator you apply, there are going to be whipsaws. But you look at this, and all right, there were a few days where, okay, whipsaw, but you look at the rally that was of the market during this time period, right here, where the RSI is above, 50 on the bullish percent index. Pretty good rally. Same with January till, just a couple weeks ago. Pretty good rally in the market. You're going to catch the majority of the rallies in the market, and you're going to miss the majority of the sell-off in the market if you're buying the market when the RSI 28 on the bullish percent index moves above 50 and selling it when it moves down below 50. You'll get whipsawed occasionally. Okay, great. You take a little loss there. But if you're buying at these times, at the times where it's going above 50, selling where it's going below 50, you're going to be on board for the majority of the rallies, and you're going to be off board for the majority of the sell-offs. There we do see oversold conditions, overbought conditions, get created. I've never found anything of value in those where, there's some correlation. But in just terms of the bullish percent index and the RSI 28, right, there's a pretty good historical correlation. And in fact, it's one of the things that is included in the market vibe indicator as one of the input data points. This RSI 28 of the bullish percent index. So a really kind of cool indicator. Now you can take this and it gets applied to not just the S&P, right? We can come in and we can apply this to different sectors that are out there. So you can come into, well, here, I'll just come up here. Let's go to $BP, and I'll hit enter because that's not a symbol. But here we come up with all the different bullish percent indexes, right? $BP NDX is for the NASDAQ 100. We can look at the S&P 100. We can look at the technology sector. We can look at the New York Stock Exchange, the Dow Jones Transportation Average, right? We can look at the utility sector, the gold miner sector, the healthcare sector, consumer staples, financials, industrials, right? We can look at different sectors and see how they are moving and how they are adjusting, and whether or not we're talking about, new bullish signals emerging or some sort of bearish signal emerging. Let's come in here and look at the transportation, right? Let's come down here and let's get our log scale off. Okay. And you're going to notice this can go all the way to 0. You don't see it in the S&P one very often, but these individual ones can. But the transportation index, it's had big moves associated with it. It's in a bearish mode right now, right? It's moved from 75 down to 45. Now, theory says 6% move in these, fine. I generally, to really kind of read anything into it, I want to see about a 10% move in it because there just aren't as many stocks, associated here with it. So one or two can skew it. But we have 45% of the transports that are in a bullish mode on their pointing figure chart, 55% that are in a bearish mode. If we add the RSI, the relative strength index here, let me come down to it, the RSI. We go 28 days here, give ourselves a little longer time period. You'll notice it's below 50. Am I going to look at transports right now and go, man, transports, they're screaming by. Let me see if I can go buy as many transports as I want right now. No. I'm not going to look as favorably on the sector. I'm going to look at it with a little more skepticism right now. What about utilities? UTIL. Well, here we are. 90% are bullish. But the RSI moving below 50. Not going to look at them as bullishly right now. What about discretionary? move below 50. I'm not going to look at it as bullishly. If I'm going to be long-term investor, bullish, I want to see they start to push back above 50 the way it did, back here in January. Well, let some of these pullbacks happen. Let some of these pullbacks kind of come in. Now, using this, you're not going to get in on bottoms and tops, right? That's not going to be realistic. You're not going to get in on bottoms, get out at tops, but you're going to ride the majority of trends. And what's really cool about this is when you start to see rallies and you start to see sell-offs, a lot of times they're driven by different stocks. You'll notice financials aren't in a bearish position when it comes to the bullish percent index. Not at all. It's one of the more bullish areas, one of the more bullish sectors. What about the INDY, the industrial sector? Well, this one's in a bearish mode. Right, in quite a bearish mode here. What about tech, INFO, right? Well, it's in a bearish mode. It doesn't mean there aren't going to be stocks in this group that aren't bullish, but it's a group that isn't seeing a whole lot of love at the moment. One of the ones that let me get it correct here. BP. GDM, sorry. I always forget the GDM because GDX are the gold miners, right? And here we have GDM, but gold miners, right? If we come in here, clean out the indicators, right? You know me, I'm bullish on gold, but I have to be careful, right? I have to be very careful with it. It's not in a uber bullish position. But here back in March, we saw the gold miner bullish percent index pull back into a bearish mode, right? We even saw it with the RSI. In fact, let me put the RSI back on here. Right? Dips back below 50 here. Okay. That's where you have to kind of let it go and say, all right, you know what? Fine. When do you look and say, I want to get aggressive to the upside again? Well, let that bullish percent index RSI move back above 50. It now becomes a very good time, or a much higher probability time for your upside to work. And so you can use this for the various sectors. You can use it for the market as a whole. It is just something that, I go through a few times a week, because they're not changing day to day, but a few times a week. One that I'm watching right now is the healthcare sector. I would not be surprised to see a big turnaround in the healthcare sector soon, but you'll notice the RSI 28 is still below 50, but starts to move back above 50. I want into the Amgens and the Gileads and the United Healthcares of the world that have finally had some nice pullbacks here with them. So, that's the bullish percent index, a really good index, a really nice way to look at things, and tells what story, right? It tells a story of change. Stocks going from bullish to bearish or bearish to bullish or no real change, right? Which is kind of what you need in the market to really kind of understand, big picture, what's going on, how things are flowing. And there's so much information and news and headlines and all of that. The bullish percent index doesn't account for any of that. It takes all that noise out, says, look, these are stocks that are making significant moves. This is how they are aggregating, and this is how you can read it. And that's the bullish percent index. There's some good information here in Chart School on the bullish percent index and on point and figure charts. In fact, it gets really in depth with point and figure charts. If you want to go play with those, for those of you who kind of just want to briefly jump into them. One of my favorite periods on a point and figure chart, at least using stock charts to match them, is a 60 minute period. Now, it doesn't mean more time or a different time. It just changes up the scale. Change up the scale over here, which is ultimately what you have to get right. Maybe after our 30 indicators in May series, we'll go out and take a look more more in depth at the, different charting styles, and really kind of get into the point and figure chart in depth, and really talk about some trade triggers, because you can even come in with it and you can do different scans looking for those stocks that are going from bearish to bullish or bullish to bearish, and they oftentimes can set up with some very nice trading opportunities. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.